Welcome to the channel. And today I'm going to be talking a little bit about investing for beginners. And what I'm going to do, I'm going to basically just talk a little bit about how I started and hopes that sharing what I've done and my experience, hopefully it can help you out. If at the end of the video you found that it helped you out, definitely then smash the like button. Don't forget to subscribe, hit the notification button. That way you're informed of every time I upload new videos. And let me know down in the comments below if you have any questions or if you want to share your experience about your investment journeys or how you started, if you started, and things like that. So basically I've been in the stock market over 10 years. And one thing that I want to throw out there, especially for new investors, is if you're working for a company, you got a 9 to 5, if your employer offers a retirement, 401k, definitely enroll in that. That's going to be something that I think is going to be really beneficial for you in the long term, right? When you go and retire. Now, I know some of us may not be thinking about that depending on your age. Some of us are more worried about the right now, and we're not really thinking about that long. And I understand, right? Some people will tell me, "Hey, what about if I don't make it to retirement?" There's no guarantees. We could definitely, pass away before retirement. We don't know how long we have on Earth, so it's definitely important, to enjoy today. And I agree with that, but it's important to prepare for the future in case you do make it, because one thing you don't want is to make it to retirement age and not have built any money for your retirement, and then you're forced to do a job that you don't want to, you're forced to continue to work, and that's not a situation you want to be in. So if you do make it, you want to be prepared for it. So you want to start investing now for retirement, in my opinion. And that's something that I wanted to say in the video for those of you that are working. If you're not taking benefit of your 401k, if your employer is doing that, that's definitely something, in my opinion, that you should definitely get enrolled in. So if you're not aware, check if your employer offers it, check the match that they do, and try to at least match it. So if your employer does 6%, try to contribute 6%. If you're like, whoa, I can't do 6%, then do 3%. Do something, right? I don't know your financial situation, but I know some people will find a lot of excuses why they can't do something instead of finding excuses, to do it. So if you can't do 6%, and I don't even know if your employer does 6%, right? Some employers do 6%, some do uh, less than that. So whatever your employer does, try to match it. If for some reason you can't, do what you can, right? But just start getting, some money in your 401k if you have that option. So I wanted to throw that out there for you. Hopefully you find that helpful. And when I did my brokerage account and I started investing, I actually started with a mutual fund. And when I started, I didn't know anything about stocks, and that's basically what I wanted to make this video, especially for beginners, right? If you're thinking about investing or you're starting, don't worry about knowing everything, right? It's a lot of information out there. It could be overwhelming. There's a lot of videos about all these things when it comes to stocks, and there's even, options and all these things that could be really overwhelming. My advice, my recommendation, and at the end of the day, you have to make your own decision. I'm just sharing, my opinion is to start, right? And that's what I did. I just started. I downloaded a brokerage account. There's a ton of them. So do your research on that. If you're not sure and you want to know some, I'll throw some out there. There's Fidelity, there's TD Ameritrade. There's other ones that you probably heard of too, like Robinhood and things like that. So there's a ton of brokerage accounts. The important thing is go on Google, research the different brokerage account, find the one that you think will be good for you, right? And put some money into your brokerage account so you're ready to start investing, and then pick something to invest in. And that's basically what I did. I started with a mutual fund, didn't know much about it. I started putting some money into it, and then after a while, I said, let me learn more options out there. It's mutual fund the best thing? And that's when I started to learn about that there are other things outside of mutual funds. There were ETFs, and I looked at the benefits and watched videos on the benefits and the cons. Because some of you like to read, some of you may hate reading, so you might find it better watching a video. And that's what I did both, right? I read, and I watched videos. I saw the benefits between a mutual fund and an ETF, and it looked like the ETF was a little bit better. So did I go ahead and sell what I had invested in a mutual fund? No, I kept it. I kept the mutual fund, but I felt that the ETF would be a little bit better, a better route. So then what I did, I put money into an ETF, and then I got an ETF. Now, some of you may be wondering, well, you know, I don't know anything. I like to start investing. Why would I do an ETF? Well, I picked SPLG a long time ago, and it tracks the S&P 500. It's well diversified. And the good thing about that is exactly that. It's diversified for you. So you don't have to worry about just picking one common stock, especially if you're new and you don't know much. I would pick an ETF. And I'm just sharing the one that I have, one of the ones I have. There's also VOO. There's other ones. You don't have to necessarily go with the one I have, but I'm just sharing the ones I do have. And what I want to go over, I'm about to share the screen, so stay tuned for this, is when you start investing, is it's common for you to panic if you put, let's say, money into an ETF, let's say SPLG, and you start, let's say you invest $500, $1,000, whatever you can, right? You invest in it, and then what I would try, I mean, what I would recommend is try to put money in it every month, no matter how the market's doing, because this is going to be long term, right? It could be towards retirement. And if it's retirement, this wouldn't be in your 401k. This would be in a Roth IRA. So you'd be creating an account, a Roth IRA. If you're like, look, I don't want to do a Roth IRA. I'm just going to do a 401k. I want to invest some money, but I want to take it out before retirement. Okay. So just do an individual account, and you're basically going to be investing this money, and there's no penalties if you withdraw this money before you're 59 and a half, right? So you're just going to, again, get your brokerage account if you choose to do that. And you don't do a Roth IRA. This is just not going to be for retirement. If you want, just have your brokerage account, you have your individual account, and you put it into an ETF. But but make sure you got like a plan. Say, hey, I'm going to be putting money here away for 5 years, and this money is going to be for a rental property, or it's going to be for an upgraded home, or it's going to be, whatever it may be that you want. You just want to see your money grow. And then what you want to do is you put a portion in to get started, and then just start adding money into it every month, no matter how the market's doing, no matter if it's down, sideways, going up. You just invest in it, and that way your dollar cost averaging. And what I'm going to show you that this may help you, especially if you're new. Let's say you do decide to get your brokerage account, or you already have one, and you're like, all right, I'm going to start investing. I'm going to invest in VOO or SPLG or another ETF. The good thing is, if you're a simple kind of person like I am, right, you could just go on Google. If you want something better than Google, you can even go on TradingView, right? And there's other tools out there. I'm just sharing some with you, but let's say you just go on Google, right? So what you do is you type SPLG. And I think this is helpful. It was helpful for me, and this is why I'm sharing it for you. When I first started investing and I saw the market going down, meaning I saw myself losing the value in my account going down, one of the things to ease my mind, and I think this would be really helpful, is I typed in SPLG, and this could be done for any ETF, any mutual fund, any common stock that you have. You just put the symbol, the tinker symbol, and you look up the chart. So what I do, I put the max, right? I put the max, and what you'll see is from 2013 all the way up to 2025, we're going to see how this chart's going. And as you can see, you're going to see how it's going up and down, up and down, up and down, right? And over here, you can also see the 52-week low, the 52-week high. Now, how is this helpful? Let's pretend let's pretend you invested right here, right? So you invested, this is just an example. Let's pretend you invested in September 6th of 2019, and you bought SPLG at $35 a share, right? And you're all excited, you got started. Now, if you don't hang around people that invest their money, let's say your friends or your family member, it's likely that a lot of people are going to say, oh, don't put your money in the stock market. It's a scam. You're going to lose your money, right? But let's say you don't listen to them. You did it anyways. And now in 2020, in April, the market you bought at 35 and now it went to 29, meaning the value in your account went down. And you might say, "Oh my God, I'm losing my money." If you share this with some of your friends and family, they say, "See, we told you not to do that. You're losing your money. Don't do that." One thing that I would say, okay, if you notice that your family or your friends or the people that you're around, if they're not where you would like to be financially, and all they do is work a 9 to 5, they don't invest their money, and everything is a con for them, and they just, they're not very positive about investing or doing a business or doing things that for a lot of people may seem like out of the norm. I wouldn't take their advice if you don't want to be where they are in life financially. If you want to be better off financially, you need to think, well, the group of people that I'm hanging around, they don't really invest, they don't talk about investing, they don't look into additional sources of income, right? And the people that you see doing really well, maybe you run into them, maybe you have some friends that are really well off, see what they're doing. Most likely, they're investing. Most likely, they are in the stock market, right? Most likely, they have more than one source of income. And if the people that you see financially and you're like, wow, I like to be where they're at. If you see them doing these things that maybe the people that you're around right now are not doing, then that's what I would start saying to myself, okay, I need to start doing something different than the people that I'm around because they're not where I want to be financially. So I need to do something different. Now, maybe your reasoning for trying to be better off financially is because one day you don't want to have to do a 9 to 5, right? Maybe it's because you want to have more time to do the things you like. It could be maybe being with your family, whatever it may be. But I recommend finding, things to put your money in that are going to work for you and build wealth. And one of these things could be the stocks. And it's pretty simple. You just need a brokerage account, put money into it, and invest in good companies. Now, when you put money in the stock market, there's no guarantees. There's always a risk, and you can always lose your money. But there's things that you could put your money that are less risky than other things. So there's stocks out there that are penny stocks. Those are really high risk, a high chance of losing your probability. Losing your money that you put into it. And obviously, if it went well, you can make a lot of money, right? There's a lot of risk, but I wouldn't go into those risky common stocks. I would invest in things that are less risky, like finding a good ETF to put your money into, and then your probability of that money growing is uh, a lot greater, right? And that's what I wanted to show. Let's say you did invest back in September in 2019, and now you notice in April 2020 it dipped to 29. Don't sell it at that moment. Buy more. Now your mind's probably gonna say, "What are you doing? Buy more. This thing's going down. You're gonna lose more money. Are you a fool?" No, you're not a fool. What you're gonna do is you're gonna increase your share account and drop your cost average because this thing is gonna go back up. And look what it did, right? It did start to go back up. And if you look in October of 2020, it recovered and it hit a new high. It went above the 35. So if you would have bought at $35 in September, you would have went through the dip, which you probably would have panicked, been concerned, hey, what's happening? Probably at that time there was something going on, right? Um, that made the market have a pullback. But if you would have stayed invested and you used that opportunity to increase your share account, you would have been back up in the green with more profit if you didn't sell. And if you just kept holding on to it, you would have went to all new highs, all the way up to $55. And look, then it had a drop. What do you do when that drop comes? You buy more. Because remember, you're going to be basically what I'm talking about is being a long-term investor, right? We're not buying to sell within a day or a week. We're buying because we're looking to grow our money long term. Now, I am going to make other videos about selling. Well, sorry, not that but I am going to make other videos where you can buy stocks and sell them sooner for profit. I'm going to be making all sorts of videos when it comes to the stock market in hopes to help people start investing by seeing what I do, see if it helps them. Now, everything I share is my opinion. I'm just sharing what I do. I'm not a professional, and there is always risk involved, but I felt that sharing my experience sharing at things that I do, sharing, things that I've gone through will help you, especially the new ones, hopefully, be able to make better decisions because there are successes I've had, and then there's obviously in the beginning there were some mistakes that I made. But if I share these with you, hopefully it'll get you in a better position when you start investing if you decide to, or hopefully you don't make those mistakes and you are able to grow your money a lot quicker. But here is one that I have SPLG, and I wanted to share that with you in case you decide to invest in it. That's up to you. You don't have to. You can find another one. But looking at the chart, I find it really helpful. And I'm just going to use another example. Something most of you probably have an Apple phone. So we're going to do Apple stock. So let's look at the chart. I do the max. And as you can see, it goes up and down, up and down. But right here, perfect. Let's say you bought Apple in 21, December 21 at 179. In 2022, you would have been like, oh man, I should have never invested in Apple because obviously you bought it at 179, you drop down to 140, 39, $40 loss a share. That's a big drop. And normally we're going to panic. But if you would have held on to it because you're doing it long term and you believe in Apple and you believe Apple's going to stick around and keep coming out with good products and continue making money, back in 2023, you're up to an all-time high. And if you Google Apple, Apple's done a lot of stock splits, and that's why you're seeing these prices. Because some people say, "Oh, well, in 2017, Apple was 42, 38." No, it wasn't. So one thing you can check is on stocks, which I recommend stock splits. So here's a stock split history. So you can see the Apples have multiple stock splits. So let me see. So the first stock split was in 1987, but basically what that is, let's pretend you have stocks back then. And what they're going to do is the price they got high and they want investors to have access, more investors. So they're going to drop the stock price, but you that already are a shareholder, your value, it's not going to go down because they're doing a split. What they're going to do is just give you more stocks and they're going to reduce the price. That's great because now you're going to have even more shares. And as you see, Apple continued to go up over time. It did have dips. But the reason I'm showing the chart is because I want you to see that that's normal. So if you decide to invest in whatever you invest in, a common stock, most likely, no, you will experience the dips. But if you're investing in good companies, it will recover. Now, if you're investing in stocks that are really high risk, really small startups, there is a huge possibility that when there's a recession or a pullback, those may not come back. Those are very risky, and I wouldn't recommend starting off with those type of stocks. If you already start a foundation with good ETFs, good common stock, and later with some additional play money after you have your emergency fund and everything, you want to say, hey, I'm going to take some risk, then that's fine as long as you understand that you may lose that money. But if you lose that money and you're fine with it and you're willing to take that risk, then that's a different story. And that's going to definitely be for a video way later on. Basically, this is just to help you that you start investing when you see those pullbacks to not get so nervous and sell everything. Now, you do need to analyze what's best for you because sometimes in a pullback, you may need to sell. It all really depends on the companies that you're investing in and if you believe in them. And that's why I wanted to show the history. I'm a believer in Apple. I believe SPLG it's a great ETF, right? So I invested in these. I have Apple and it's done well for me. And why I'm a believer too, it's experience, right? I bought Apple over 4 years ago and I seen my money grow. And I've gone through the dips and I've seen it go back up. And that's really made me a believer in the stock market that yes, you can build wealth. Now, there's going to be people that have it really is going to depend always on the experience, right? If you start investing in stocks and let's say you were investing in and stocks that were small little penny stocks that were companies that were starting up and you lost all your money, well, the possibility of that's really high. And then you might have a negative view on stocks, but that's just the type of way you were investing. If you could take it a different approach, I believe you can have a lot of success in the stock market. And that's why I wanted to make this video. I feel that a lot of people get overwhelmed. It is a lot. So my recommendation is just get a brokerage account, do your research and find a good ETF that tracks the S&P 500. Start putting some money into that. Understand it's going to go up and down, up and down. Some of the things that can help you, remember, go on Google, look at the chart so you can see the history. Also do some research about stocks. If you look at every downturn, the market's recovered and gone to all new highs. Again, as long as you're investing in good companies, right? Not just anything. There are some companies where people do lose all their money. But hopefully this video kind of gave you some, helped you a little bit understand that the market does go up and down. Hopefully helped you know that when you're invest in good companies, a good ETF. That way you have a better chance of making money. And I believe when you start seeing yourself making money, you start seeing your money grow, you'll become more of a believer in the stock market, and that'll probably help you do the dollar cost averaging, right? Once you see that something works, you're going to have faith to put money into it. But the only way for you to see something to work right is to get started. So download that brokerage account, start putting money so you see it for yourself, not just watching me or somebody else on YouTube or reading about it. You need to start, get started, get into it. That's my opinion. Now, you don't have to do anything I said. I'm just sharing that I started, how it was for me, how I started to believe more in the stock market was by doing it, by actually placing trades, seeing my money sit in the market, see my money go down, seeing it go up, looking at the charts. Those were the things that helped ease my mind when the markets were down. What made me start putting more money into it is that I saw it go down, then go back up, and then I started seeing myself in the green. And I started seeing my money grow, and that made me a believer. And I wanted to bring this video today to help those that are thinking about investing and they're just not sure. I just wanted to say, hey, I just started. I started putting money into it. I saw it go up. I saw it go down. But since I've been doing this now over 10 years, I have some of these stocks that it's crazy how much it's grown and how much more money I have today because of the stock market from investing. So I am a big believer. I think it could help you. If you found the video helpful, let me know by smashing that like button. If you have any questions or you want to share your journey with the stocks, let me know down in the comments below. I appreciate you watching, and I'll see you on the next one.